Good morning, students. So today we will continue to discuss the chapter money and banking. So until our last class, we have discussed about the central bank and their functions. So today we will discuss the next part. This is the commercial banks and its functions. Now you see central bank. Okay, as I have discussed in the earlier classes, that central bank is the head, or it is the apex institution of all the banking or the financial sector. Okay, now commercial banks, they mainly operate, or they mainly provide their service, okay, to the public. Public means general people. Okay, under the regulations, under the directions given by the central bank. So in our country, the central bank is the Reserve Bank of India. Now central bank is basically that financial institution, okay, that accepts the deposits of the public. Okay, that means if you or anybody, if he or she wants to save the money in that particular bank, okay, then that bank should accept the money. Okay, that is called your deposit. Okay, so commercial bank, okay, is one that accepts the deposit from the public, and along with that it should also forward loan to the public. Okay, so that is basically called a commercial bank, that accepts the deposit of the people, and it also gives loan to the people. Okay, now so there are many examples of commercial banks. Some of these are you see here: State Bank of India, Punjab National Bank, UCO Bank, HDFC Bank. Okay, all these are basically examples of commercial banks. So all commercial banks, okay, they operate under the guidelines given by the Central Bank of India. Okay, now you see next important is the functions of the commercial bank. Now commercial bank, okay, the first function is what? It mobilizes savings. Okay, now savings means when any people, he or she wants to deposit or keep the money in bank. Okay, the bank should accept it. Okay, because that is the primary function of a bank. Okay, now the bank, it accepts three kinds or three types of deposit. Okay, savings, these are also called as your deposits. Okay, when the money is kept in the bank, okay, that is called as deposit. So saving or deposit, they are of three types. So first you see current deposit. Now current deposit, okay, these are basically deposits. Okay, suppose if I have saved 1000 rupees as current deposit or current saving in the bank. Okay, then whenever I will want to withdraw my my rupees, that is 1000, the bank will immediately return me my money. Okay, that is can be withdrawn by the saver at any time. Okay, you have deposited suppose 5000 rupees in the bank. Now whenever you will want to withdraw your money, the bank will immediately allow you to withdraw your money. That is called your current deposit or current saving. Okay, now the bank, in case of current deposit, it does not provide any kind of your interest. Generally the bank provide interest on the money that we deposit. Yes, 2% or whatever, the bank, it provides deposit, sorry, interest. Now in case of current deposit, the bank does not give any kind of your interest. Okay, now next type of deposit is your fixed deposit. Now fixed deposit is what? The saver or the depositor, okay, it saves the money. Okay, it keeps the money in the bank for a fixed time. Okay, that is called your maturity period. Okay, suppose for 2 years, for 3 years, that amount is kept in the bank, and if anyone likes to withdraw the money, then he or she has to give a prior intimation, okay, that he or she wants to withdraw the money. Okay, that is called fixed deposit. The money is saved in the bank, or it is kept in the bank for a fixed time. Then next is your, here also in case of fixed deposit, okay, the bank, it provides interest. Okay, in case of current deposit, the bank does not provide any kind of interest, but in case of your fixed deposit, the bank, it provides interest. Okay, interest to the depositors. Then the next deposit is your saving deposit. Okay, now saving deposit, okay, the saver, okay, whoever will save his or her money in the bank, Okay, the bank will allow him or her to withdraw the money, but there are certain restrictions like he or she has to keep a minimum amount, okay, in his or her account. Okay, that is nowadays it is around 500 rupees. Okay, so if you have suppose 2000 rupees, you can withdraw up till 1500, but the rest 500 you have to keep it in your account. Okay, a minimum balance has to be kept in your account. Yes, that is the saving deposit. And in case saving deposit also, the bank will give you interest. Okay, interest will be provided, but it is lower than this fixed deposit. Okay, so these are basically the three types of deposits that bank it provides to its public. The next, you see, commercial bank, it also offers loans. As I've already told that a bank, it two main functions are there. That is, it gives it accepts deposit, okay, deposit of the public, and also it offers loans. It gives loans to the public. Okay, so it gives loan to various people, you see, farmers, artisans, okay, industrialists, telawalas, rickshaw pullers, and others also. Okay, it gives loan to all the general people. Then you see, commercial bank as a whole can create credit money. Credit means loan. Okay, loan. Now there is a mechanism how the commercial bank, okay, it gives loan to the people. Okay, now suppose A is an individual, okay, and this is suppose a bank, any commercial bank, and there's another individual B. Now the money that A deposits in the bank, okay, the bank uses that money only to give loan to B. Understood, no? Suppose A, he has deposited 100 rupees in the bank. Now B, he needs loan from the bank. Now the bank will keep a part of this 100, suppose 20 rupees, okay, it will keep with itself, and the rest 80 rupees the bank will give as loan to B. Okay, that is a simple mechanism how bank it gives loan to the people. Okay, that means what, from the deposit only the bank it provides loan to the people. Okay, now so you see the savings that are deposited by a saver, okay, that is called a primary deposit. Means this 100 rupees, okay, this is called what, primary deposit. That is the saver, it deposits in the bank. Then the derivative deposits are created by the bank. So while giving loans, okay, the bank it creates deposits from this primary deposit only. Okay, that is called your derivative deposits. Then you see a part of the primary deposit retained by the bank. Okay, that means the bank cannot give the whole amount as loan. 100 rupees is kept by individual A, it's not it is deposited in the bank by individual A. Now this individual, he cannot the bank cannot provide the whole of this 100 rupees as loan to bank, to B. Okay, it has to keep a some amount as reserve, that is 20 rupees. Okay, now I will explain how the bank what is the mechanism of credit creation. Now in this example we have taken that 20% as your uh, retained amount. Okay, that means this 20% what out of the deposit, the bank will have to keep 20% as reserve. Okay, and the rest it will be given as loan. Okay, and this percentage it is fixed by the central bank. So here you see this there are three banks, bank A, bank B, and bank C. Okay, now suppose one individual A, okay, he has deposited 1000 rupees in bank A. Okay, now this is called your what, primary deposits. Now according to our example, we have taken that 20% is reserved by the bank. Okay, because that all commercial bank, we know they follow the guidelines of the central bank. So according the central bank has fixed this 20%, okay, as reserve. So the bank, all the commercial bank, they have to keep this 20% as reserve. Okay, now out of this 1000, if we take 20%, then it will be how much, 200. Okay, so that means this 200 rupees the bank will keep with itself, and the remaining amount, how much, 1000 minus 200, it will be 800. Yes, so this 800 will be given as loan to somebody who wants to take it. Okay, so this 800 will be given as loan, and this 200 rupees will be kept with the bank. Okay, now why this 200 is kept with the bank? Because whenever individual A, he will come to bank to withdraw the money. Okay, generally what happens, all the amount is not withdrawn by the customer at one time. Okay, some amount is withdrawn only. Now when A will come to withdraw his money, the bank, so that the bank can give him, okay, can give him the money, that is why a part is kept. Now this 800, okay, whoever will take loan, suppose individual B, he has taken loan of this 800 rupees. Now after making payment to anybody, okay, suppose individual B, he has made payment to individual C. Okay, now C, he has, again it is assumed that C will deposit this 800 again in another bank, suppose bank B. Okay, B has taken loan from bank A 800 rupees and he has made payment to whom? To C. Now C, he has deposited the money in another bank B 800. Okay, and again here also this 800 is the primary deposit. So 20% of this deposit will be how much? 160. Okay, that means the 160 will be kept as reserve and the remaining 640 will be given loan to the people. Now again this loan, whoever will take this loan, suppose D, individual D, he has taken loan, okay, and he has made payment to individual E. Now again it is assumed that E, he will again deposit the money again in, suppose in bank C 640. Okay, again this has come as new deposit for bank C. Yes, so again by rule 20%, that is how much? 128. Okay, 128 it will be kept as reserve by the bank and the remaining 512 will be given as loan. So this process it continues. Okay, like that this process it goes on continuing. Now if I add all this 1000, then 800, then 640, okay, so all, then the total deposit, okay, because these are what deposits. Okay, so the total deposit will be much more, okay, than this first deposit. Okay, so see here, if I go on adding all the deposits, okay, if dot means it's a because it's a continuing, but the process goes on continuing. Okay, the total deposits is how much? 5000. That means the first deposit was how much? 1000 rupees. Yes, now it is 5 times more, that means into 5, that is 5000. Okay, 5 times more than the first initial deposit. Yes, now how this 5000, okay, how this 5000 we have got? That is simple formula, that is 1 divided by 20%, that means the reserve amount into the first deposit, that is 1000. Okay, so 1 by 20% you will get 5 into 1000 will be how much? 5000. Okay, so this is how the 5000 amount has been derived. Okay, so that means what? The bank can create more deposits, okay, from the first or initial deposit. Okay, so that is the whole mechanism how the bank it gives credit loan to the people. Then you see, and the last function is that some bank also provide, okay, the facility of locker also. Okay, that means you can keep some valuable documents, okay, important or valuable ornaments, important documents, okay, and other important things in the lockers of the bank. Yes, so this is for safety. Okay, the bank it will provide you the locker facility where you can keep all the valuable things, okay, safely. So that is the last important function of the commercial bank.